Hello traders, welcome to this video. In this video we are going to be discussing the Dragonfly Doji candlestick pattern. In previous videos we have discussed the Doji candlestick pattern in general, and we have also discussed the gravestone Doji candlestick pattern. But in this particular video we are going to be discussing the dragonfly, the dragonfly doji candlestick pattern. So key points to note are that the dragonfly doji candlestick pattern is a bullish reversal candlestick pattern. It usually appears toward the end of a bearish move. The dragonfly candlestick pattern usually indicates that a bullish move is about to begin or continue. For example, we can see uh, I just saw that not long ago. Where is it? Okay, it's here. Right. We can see an example of a dragonfly doji candlestick pattern. The features of the Dragonfly Doji is that it has a long wick at the bottom and the body of the candlestick is toward the top, and the open price is not far away from the close price while the body remains at the top of the candle. So that is the doji, the dragonfly doji to be specific. That is the dragonfly doji candlestick pattern. Now many traders usually look out for the dragonfly doji whenever there is a bullish move but a retracement happened. For example, while in a bullish trend, higher highs and higher lows are occurring. Amid the higher highs and higher lows, in some cases, you could see a dragonfly doji candlestick form at the low. You may not always see this pattern because it doesn't form always, but in some cases you could see, just like how it happened here, you could see the dragonfly doji form to show you that the price is about to continue in the bullish direction, because this is a bullish trend and the candlestick appeared just after this pullback. So that is going to be an indication that the bullish move is about to continue. So if we were to make a decision based on this pattern, we would have entered a buy trade somewhere around here, and probably a good spot for setting the stop loss is just right below the doji. Just below the doji, the dragonfly doji is a good place to set your stop loss. So we would have entered right after the candlestick pattern and set our stop loss below the doji, and then we would have exited at the next resistance level, or we can use other indicators to confirm our exit signals, because remember, the doji is just a candlestick pattern. So the doji does not tell you when to exit your trades. So you will need to employ other indicators or other price movement to determine when to exit your trades. And one of the main ways to determine how to exit your trades is the use of resistance levels. Now we can see that there is a resistance level around here as a result of price rejections here and here. So had it been we had entered a buy trade right after this candlestick pattern, perhaps we would have exited at this resistance, and that would have fetched us That would have fetched us over 58 pips. That would have been a good move, and our stop loss would be just below here, and you can also use your um, stochastic oscillator to confirm signals from the Dragonfly Doji. You can use any momentum indicator just to confirm your signals. It is not very advisable to make your trading decisions just based on one candlestick. Okay, although the Dragonfly Doji can be um, right at different occasions. Many a times the Dragonfly Doji can be right, but just for extra confirmation, you can also decide to employ the use of momentum indicators like the stochastic. And if we were to use the stochastic to confirm, we can see that just right after the doji formed, the stochastic indicator had a bullish crossover. That would have been an extra confirmation to enter the buy trade. On the other hand, you can also decide to use bullish candlesticks as extra confirmation. For example, after this Dragonfly Doji had formed, we would have decided to perhaps wait for a long bullish candle like this to form, or basically a bullish candle to form. It doesn't have to be this long. We would have decided to wait for a bullish candle to form just right after the doji, just for confirmation to be sure that the direction is almost certain. And for the exit, like I already said, you can consider resistant levels, or you can consider to employ an indicator to determine your exit. So perhaps if we had entered a buy trade here and we wanted to use an indicator to determine our exit, then we would have waited for the stochastic at the overbought level to display a bearish crossover, meaning we would have exited our trade somewhere around here right after the bearish crossover. Now, let us look for another example where the Dragonfly Doji displays um, a reversal from a bearish trend. Let us see if we can identify an example where the Dragonfly Doji indicates a reversal from a bearish trend. You know, the one we just identified right now was a bullish continuation. It was a bullish continuation, a continuation of a bullish move. So now I want to see if we can find another example where a bearish trend is about to end and then the doji formed. Okay, we have one around. Okay, this is perfect. This I just saw it now. This is perfect. Um, all right. So now this is an example. We can see that the price was declining. It was it it wasn't exactly a bearish trend, but this is the daily time frame. So we can see that the price was declining from around the 19th up till up to the 19th of January up to 4th of February. So I think that should be about 2 weeks or so. So although this was not exactly a bearish trend because it is still a bullish trend, it's making higher highs and higher lows, so it's still a bullish trend. But at least the bearish move happened for like 2 weeks. So let us just use it as our second example. Now we can see that right after the bearish movement, the Dragonfly Doji formed. We can see this is a Dragonfly Doji here. You can see that the body is at the upper part of the candlestick, and the open price is not far away from the close price. And after this candlestick pattern formed, we can see that there was a significant bullish move. Had it been we had entered around here, we would have ridden this move all the way up to this point. And if we were to set our stop loss, a good position to set stop loss is below the candlestick pattern, or if the candlestick pattern is not at the bottom of the swing low, then another point to set the stop loss could be below the swing low. And then for the take profit, we can consider resistant levels, resistant levels for our take profit. So this would have been a good place to exit the trade here, would have been a good place to exit the trade if we were to use the resistant level. That means we would have entered somewhere around here and exited somewhere around here. But using an indicator for extra confirmation, we can see that just right after the bullish crossover happened, the price of the asset moved upward, and this is where the doji formed. So the doji and the stochastic oscillator had a confluence because the stochastic oscillator also signaled a bullish move right after the doji signaled a bullish move. And if we were to use the stochastic to determine our exit, then we would have probably exited somewhere around here, not too far from the resistance. So two of the ways you can use to exit your trade after you have entered a buy position, after the doji candle forms. The two ways are either you use a resistance or perhaps a momentum indicator like the stochastic oscillator to determine your exits. In the case of the stochastic oscillator, it's when you have a bearish crossover from the overbought region. Remember that price action is what the doji functions with. The doji functions with price action, so it doesn't lag like other indicators such as the stochastics and the rest of them. However, you can use these other indicators as extra confirmation. So whenever the doji forms, you can then refer to other indicators just to confirm the signal, or you can decide to use other candlestick patterns like a successive bullish candles. But the limitation or the con, a major con with waiting for successive bullish candles to form is that it now reduces the potential profits you would have made. So if you had decided to wait for like one extra bullish candle to form right after the doji, you would have reduced the profits you would have made, because if you had entered right after the doji, then you would have ridden the bullish move up to whenever you exit. Let's say we exited here, we would have ridden the bullish move right from the point we entered till here. But if we had waited for a bullish candle to form or two, then we would have entered somewhere around here, which would have reduced our profit. So instead of waiting for extra bullish candles to form, you can just decide to use stochastic oscillator or any other momentum or indicator, any other momentum indicator, or any other indicator at all to confirm your signal from the doji. So basically this is it for the Dragonfly Doji. Just remember that the Dragonfly Doji indicates bullish reversal. It usually forms at the end of a bearish move or after a pullback in a bullish move. So you can the main places where you can find the Dragonfly Doji is at the end of a bearish move or at a pullback in a bullish move, just like the one this was a bearish move, like a 2-week bearish move, and the doji formed right after the bearish move, after which the bullish move began. And then the first example that we identified was um, the first example we identified. I can't remember exactly where it is, but let me just use this example here. It's this an example that shows the candlestick forming in a bullish trend just right after a pullback. We can see right here, this is also a Dragonfly Doji. So the two places that Dragonfly Doji forms are one, at the end of a bearish move, and two, at after a pullback in a bullish move. So you can use this indicator to determine when to enter a buy trade. This candlestick pattern is usually used for buy trades only. So that is this. That is it for this video. I hope you found it insightful, and if you did, kindly like, subscribe, and click the notification bell for further updates. Cheers, guys, and happy trading.